global economy continues to expand at a robust pace. The February PMI surveys compiled by Markit, so this is an aggregation of all the information we collect from around 200,000 companies around the world, showed that business conditions continue to improve. Our chart here tracks the headline index, which tracks business activity against global GDP. You can see the rate of growth eased, but it's still running at a rate of growth of around 2.5% per annum. So that's not bad by historical standards. Now, as we can see, there was an easing in the rate of growth. Now, this reflected primarily some weakening in growth in the US, Japan, and the UK. All of these, however, largely reflected severe winter weather, which hit those economies. So in the absence of those factors, we perhaps saw the rate of growth remaining pretty much in line with what we saw in January. So a fairly reassuring picture. When we look at each of those developed countries in turn in this chart, we can see that the UK and US still seeing very strong rates of expansion even with those winter-related easings. Japan is also still growing at a robust pace. Now that's in contrast to the GDP data. Weak GDP data in Japan has largely been reflective of imports of energy, which Japan's had to increase after the Fukushima incident. But overall, the PMI has shown that the business sector in Japan is really doing quite well. Meanwhile, in the Eurozone, we've seen business conditions pick up. The Eurozone recovery is gaining more momentum. The PMI there is at its highest since early 2011, suggesting the region grew perhaps 0.5%, maybe even in the first quarter if we see a decent figure for March. So all the developed countries doing well, albeit with a bit of weather-related disruption. The same, however, can't be said for the main emerging markets. Our chart here compares the headline PMIs measuring activity across manufacturing and services for Brazil, Russia, India and China. If we look at these, all of them are hovering around the 50 line, which signals a stagnation of business activity. China's even slipped below 50 this time. India, we've seen some upturn there. The index actually ticked marginally higher than 50, but it's still really at a level signaling stagnation. So here we've got a languid picture across the emerging markets. It isn't just these major ones. We've also seen business conditions deteriorating in manufacturing in some of the other key emerging markets, such as Indonesia. If it's not contracting, it's very weak rates of expansion. So once again in February, the global picture is one of modest, reasonable overall global expansion, but those growth rates largely confined to the developed world, while emerging markets stay in the doldrums.